The OTC market recorded intraday volatility in reaction to current factors driving activities in the domestic financial markets, although there was quite marginal movements across tradable maturity yields. Now, on the currencies front, the Naira has maintained a US Naira rate above 161 Naira. Now, to review the fixed income market, I'm now being joined by Kizito Odunze. He's a bond sales analyst at Don Lauren Merrifield. Thank you so much, Kizito, for joining us.
Thank you, Esther.
Let's kick off with the Naira. It looks like obviously 161 and slightly above is a new level for the local currency, but we did see the Central Bank of Nigeria just marginally stepping up on supply today at its first auction for the week. It sold about 300 million from around 290 million last week. What can you tell us about that?
Esther, as you said, the CBN offered $300 million in its session today for the WDAS auction. Last week they sold about 290-something million, but sold the full offer today. As you said, the Naira seems to have found a new home, whereas in the WDAS sessions, the Naira has stayed stable at a stop rate of 155.76. In the secondary market, however, as you said, 161 levels seem to be the order of the day. It's interesting that in today's trading, the Naira opened at about 161.45. It faced similar pressures it's faced all throughout last week. We got a high of about 161.95. This implies that on the offer, it will have crossed 162 with the 10-kobo spread. So we'll have seen an offer rate of 162.05 in the market today. Thankfully, there was some support, and the rates further dropped to about 161.37, below where it opened, and that's where it closed.
Now let's look at the spread between the Naira at the official market and the parallel market. It's trading at around over 162 Naira, the parallel market. So comparing that with the official market, give or take about 5 Naira, do you think this is a spread difference that the central bank is comfortable with?
It's left to be seen what the central bank will do, which sort of dictates their level of comfort. So far, the central bank seems to have left the market to the market forces and the traditional mechanisms that help the market find support and resistance levels. Interestingly today, as I said, when the rates got to as high as 161.95, an age-old mechanism, the supply from oil majors, came and crashed rates. So the market seems to still be taking care of itself. I'm wondering what will happen when we cross the 162 level on the bid. Then we might now see the CBN react, and then we'll know that there's some level of discomfort.
But do you think that that's likely to happen this week? Any signs that that might happen perhaps between Thursday and Friday this week?
It's not far-fetched. I would say it's highly likely, because I was speaking to a couple of traders who mentioned that the expected inflows, which provide support, all came in today and caused the depression. So we still have 4 days left in the week. If the Naira faces similar pressures and there is no unexpected inflow by any multinational or oil major to help stem the devaluation of the Naira, then we might actually cross the 162 level this week. We got very close to it today.
Okay, let's go over now to the cost of lending among banks at the interbank. On the maturing bills front, only about 96 billion Naira will mature that's the OMO bills. Do you think what impact could this have on liquidity at the market?
You know, last week we observed that the primary auction, the CBN auctioned offered about 50 billion and also gave out about 30 billion on the uncompetitive basis. However, there was about 168 billion that matured. We had a surplus of over 80 billion last week. There's also an expectation of, as you said, 96 billion this week. That comes to about 170 billion. Those funds have to find a home somewhere, and it's not unconnected to the fact that we still see falling yields in the treasury market. That excess liquidity seems to have found a home in the treasury market, especially at the shortest end of the treasury bill curve, where today we saw rate depressions of as much as 134 basis points, which is not insignificant. So going ahead, we expect that would see further suppression of yields in the treasury bill market, and possibly some of those funds could trickle and find their way into the bond market.
Okay, now still talking about yields, this time on a fixed income, we saw rates hovering at around 13% all through last week, and some strong demand from local pension fund administrators. Do you think that trend could continue this week?
We'll just have to wait and see, because today doesn't support that. We actually saw a slight retracement per se, even though it was insignificant. Across the bond curve, we noticed that yields actually rose, which is in sharp contrast to what happened in the treasury bill market. Yields actually rose, however marginally, by about 10, 12, 5 basis points here and there. Would actually just say that the bond market was flat. We won't take that as a sign that there is a reversal. It could actually be that this is just a lull before a new push in the bullish direction we've seen so far. So it's not entirely clear as to whether the bullish pressure still remains. We'll just have to wait and see.